This podcast channel is about you, successful international entrepreneurs, successful expats, successful investors. Sponsored by HTj.tax. Okay, fantastic. Thank you for joining us this evening. My name is Darren Joseph, and with me is Boon Yip, and we're going to talk about US Singapore tax. Again, for those who are joining us for the first time, we do not give advice. We are qualified professionals. So, of course, we're just talking about general principles and general issues. If it is that you need advice that is that you want to take action on, you need to engage a professional who is duly qualified to give that advice or to help you with your tax issues. So we're having a general conversation about general principles. Thank you for joining us, HTj.tax, Moores Rowland, and we do this every week. If you go to HTj.tax/events, you can see what live streams we're doing every week. And we also publish videos every day on over 20 various platforms. So wherever you get your podcast, chances are we are there also. So, this is being recorded. So for those of you who are joining us on Zoom, if you do not want your image to appear, it's simple. You're going to keep your camera switched off. And whether you're on Zoom or one of the other platforms, if you want to ask a question, just type it in the box below. For those on Zoom, I would have emailed you before inviting you to submit questions. 5 of you did. Thank you for that. For those who have not done so, it's not too late. Just type in the box below and we will discuss them in the order in which they received. So without further ado, I turn you over to Boon Yip. Boon Yip, the floor is yours.
Good evening, everyone. It may be morning for some of you all, but I'm in Singapore, so good evening. I just would like to share a bit about Singapore tax. Before I start, just a brief introduction about myself. My name is Boon Yip. So I'm a SME client service director at Moores Rowland, Singapore. I work with Darren on cross-border cases like US tax with Singapore exposure and vice versa, right? So, okay. Give me a second, I'll share my screen. All right, so here are we. So today I will share a bit briefly about taxes in Singapore, both for individual and for companies, of course. Yep. And okay, just a beginning, just to have a snapshot on Singapore. So if you look at some of the publications that we can find on the web, you can see Singapore is actually quite on top in terms of ease of doing business, efficient governments, and least corrupt countries in the world. So these are the recent one that has been published. So Singapore, in terms of doing business, ranks second. Ease of doing business is ranked second. So if you look at all these statistics, you can see they are ranked quite efficient in terms of governments. The policies of governments are quite friendly to business, and encourage entrepreneurship, startup in Singapore, and they provide supports for qualifying companies to accelerate their growth, also from Singapore and out from Singapore, right? So, okay. So just basically on starting a business, okay, you talk about permanent establishment. It's a fixed place where you start a business and where you have a management, and it's where you have most of the business activities, right? So when you have a permanent establishment, you basically set up the residency of the tax. So if you have a PE in Singapore, you will be a tax resident in Singapore, and you have subject to tax in Singapore. So there are a few types of business structures. Okay, you have companies limited by shares, by guarantees, partnerships, branch, right? So proprietorship. The most common one would be companies limited by shares. So there are plenty of companies set up every month or even every day in Singapore that we can see they are in this structure, right? And okay, incorporating a business in Singapore mainly comprises 3 sections, okay? So pre-registration, what you need to consider is a decision on the structure where you have, if you are MNC coming in from investing from foreign investment, and you have to consider what structure you want to set it up. Okay, you can consider a limited company by shares or even a branch. If you think that you are here just for a short period of time, yeah, that model will work. And obviously, there are a lot more to do compared to the past. I mean, the past, setting up a company, it takes like a day or even a few hours. Okay, it's a lot more compliance lately due to the need to comply of the money laundering, okay, and the counter-terrorist financing for business, right? So that's why service provider like us has to be a little bit more in terms of heighten the risk on this aspect of the KYC. Okay, so registration of company, actually talking about pre-registration, if things are done properly, it takes a few days, right? 1 or 2 days, the company is up and running. Okay, and the next thing obviously is opening up a bank account. Is unlike the past, opening of bank account has become very much more difficult lately. As what I said earlier, due to the need to comply with a lot of compliance, like in the AML compliance, CFT compliance, right? So typically it would take 1 to 2 months. And I mean, I've seen cases where it take up to 6 months, depending on the structure, right? So what happened is in Singapore, we work with banks. So we are a panel of major local banks that we refer, that we get pre-qualified as a vendor, and our referral obviously will have a better chance of getting it approved faster, right? So post-registration, obviously you are talking about work passes, right? If you were to set up structures, if you were to put headcounts in Singapore, then you have to consider work passes for your directors or even for your key staff, right? And yeah, if you are in specialized industry like in the F&B or in the tourism sector, you may need licenses, right? So the last but not least is the application of GST, right? It may not be necessary, it can be voluntary depending on your input taxes. So business with high input taxes are advised to register for GST so that you can claim back from the inland revenue. Okay, so what is taxable and what is non-taxable? Okay, Singapore taxes, I would say, is not that complicated in terms of looking at this category. So if you talk about taxable income, obviously gains, profits, anything to do with trade is taxable. Okay, so non-taxable, obviously capital gains, right? Dividend income. Okay, Singapore has a tier 1 system, so all dividend income are basically exempt from tax. Right? So foreign source dividend, yes, is also not taxable, provided that you have suffered tax in the foreign country, right? And okay, the very important question is when is taxable. So Singapore tax system is based on accrued basis. So when it's accrued or when derived, and you have to subject to tax. It doesn't matter whether you receive or not. And when it's accrued or derived from Singapore, it has to be taxed. And the other aspect is when the income is remitted. So what happens is if you have investment in overseas, let's say if you have interest, right, from overseas that you have not remitted into Singapore, it will not be taxable, right? Okay. Okay, tax calendar. Okay, so okay, the effective tax rate. So if you look at the left-hand side, these are the latest effective tax rate in Singapore. If you look at the first billion that you made, you are effectively paying about 14.88%. So it's less than 15%. It's actually one of the lowest tax regime in, I would say, Asia Pacific. You have Hong Kong that is come close at 16.5. I think Hong Kong does have a tier system. First 2 million Hong Kong dollars is at 8.25%, but comparatively, Singapore is still lowest. So if you consider setting up a regional headquarter or even step foot into the Far East, you may consider Singapore as the most favorable tax system, right? So the tax calendar is quite simple to remember. So you have two tax calendar. One is for you to file the estimated chargeable income, which is due 3 months after the end of your financial year. And the other is every 30th November. That is your final submission of your corporate tax. Okay, so we are now in the individuals. Okay, individuals, what is taxable and what is not, right? So obviously individual, we talk about trade, business, your employment income, they are all taxable. So if you have property and you receive rental income is taxable, but not capital gain. So if you hold a property and eventually for a few years and you sell it and it's not subject to tax. But obviously it's not that simple. You have to prove that these are capital in nature. Okay, there are ways to prove. Obviously, there are few factors that you have to look into it. Okay, so the other thing is other sources like royalty, right? They are all taxables. And okay, what is non-taxable? Oops, sorry. So yeah, so we went through earlier in the corporate tax. So for individuals are almost the same. Okay, overseas income. If you're even if you don't declare, if you don't remit, if you remit, it's not taxable, right? So you need not declare anything. Dividend income obviously is not taxable, subject to cooperative. Interest income received from banks, okay, and from interest from debt security and inheritance. So Singapore is not subject to inheritance tax. So there's no inheritance tax at all. Okay, individual rates. Individual tax rate is based on tier system. So I would think it's not the lowest. So if you look at the highest, it's at 22%, right? So if you are, so there's a bit of a tax planning that you can do. Normally for those that are higher income individuals, probably they would consider taking a lower salary, or even business owners, they would consider taking a lower salary scale, but most of getting dividend out from the company. So that's not subject to tax. Yeah, it could be a very typical way of planning, right? So tax calendar, 15 of every year. Unlike corporate, individual tax has a tighter deadline. 15 of every year, you have to file your individual tax. Okay, so there are other taxes in Singapore besides the income tax. So there are withholding taxes. These are indirect taxes. And yep, royalty, if you have loan to a related corporation in elsewhere, and that is subject to tax. Okay, and yeah, royalty income, if you have intellectual property, that is subject to tax, right? So payment of services, right? So withholding tax, the very important element to look at it is where the services are performed, right? So briefly, withholding taxes. So these are the withholding tax rates. So if you look at it, the nature of the income and the tax rates. Okay, so if you are in shipping industry, basically you don't subject to any withholding tax. Okay, technical assistance is something very different. So it's at the prevailing corporate income tax rates. All right, okay. These are, yeah, directors, professional and public entertainers. So what happens if you are a foreign director? So you are subject to tax at 22%, right? Is the highest. So if you look at the individual income tax, the highest rate, the highest tier is at 22%. So do foreign director, as in non-tax resident director. So it's subject to 22% tax for payment of director fee. Okay, so yep. So these are a few taxes. So okay, as I mean, Singapore is one of the highly incentivized country in terms of taxes. So there are actually a lot of incentives available for qualifying companies. Okay, so one of the most popular is the IHQ, or the regional headquarter, RHQ. Okay, you can actually have concession tax, okay, subject to approval from the tax authority. Obviously, there are criteria to meet, right? So the lowest you can get to is 5% tax. So it's relatively low, right? Global Trader Program is one of the very popular incentives that a company would like to apply. So what happens is, if you're in commodity business, qualifying business, obviously, including commodity, gold, like gold, all sorts of commodity trading, you can qualify for GTP, where you can enjoy concession of 5%, right? So others are merger and acquisition, up to 40 million of the value of acquisition. They're entitled for tax relief. And obviously R&D is among the more popular one, but it's not so easy to meet the criteria for R&D. So a lot of company may have different definition of R&D, but it's up to the company to prove. And yep, so you have this fund management incentive. Obviously, these are something to do with family offices, which the government have been advocating lately. That a lot of publication about setting up family offices in Singapore. So these are the incentives the company provide. So okay, I have another slides later. Perhaps I'll get more into detail later. So GIP is another program incentive to basically attract those high net worth individual. So what happened? I recently dealt with a case. It's a Chinese national. So he has a company in the NASDAQ, and which he sold off, and basically he put all the money into a trust, into a I think from BlackRock or what. So yeah, so immediately he qualifies. So the minimum requirement is 200 million. So he gets, what happened is he get pre-qualified so that he will get a resident status in Singapore. So it will bring his family down, and for the purpose of a second generation to live and stay in Singapore. This is one of the more difficult one to prove because you need a lot of wealth. So these are more towards the high net individual. Okay, so this is the family office that I'm talking earlier. There are basically 3 sections, the 13CA, 13R, and 13X. So if you look at the 13CA, there isn't any criteria. So basically, it's more of a private kind of family office. Okay, you can do investments. You can set up structures that not even a company, it can be individual. So it's quite easy. It's a startup or family office. Normally, a lot of people would go for 13R. Okay, you have tax, you are incentivized, but you need prior approval and there are criteria to meet, right? 13CA are those that they want to try out and later on they will upgrade to 13R or 13X even, right? Obviously 13X are those a lot more wealth. You're talking about asset under management of 50 million, right? So typically the FO structure would be this way: the trust involving a holding company, the family holding under a trust with a holding company, and you run a family office running by an investment team, and you have a SPV and investment portfolio, right? There are, of course, a lot more structures that can be done. Okay, so just following through, these are the work passes. I'm not going to go through very detailed, but if you look at that, so basically there are quite a number of passes. For professionals, you have 3 levels of passes, and skill, semi-skill, these are more towards the foreign workers coming into Singapore, right? Even for trainee students, you are entitled passes. So those intern, like if you are MNC, PNG, they send intern from overseas, yep, it can be done, right? Family members, obviously it depends on the principal. So if you hold an employment pass, okay, your spouse would subject to can apply for dependent pass or even long-term visit pass, right? So a dependent pass allows you to work, but not a long-term visit pass. So each pass has a different criteria to meet, right? Yeah, these are again a different type of pass, right? So a bit about Moores Rowland. So we are present in Asia Pacific, 14 countries. So we are full-fledged service firm. Okay, these are the services that we provide. And also US tax specialist, if you look at it, with Darren. And yeah, a snapshot of what we do, right? And these are our contacts. Yeah, so I've come to the end of my presentation. So over to you, Darren.
Thank you very much, Boon Yip. And thanks for those who've been asking questions. Again, it's not too late. If you have any questions or topics that you want us to sort of explore, feel free to just type in the box below and we'll get to them in the order in which they are received. So, okay, first question. Hi there, I work for a US-based company who, which has many overseas offices, okay? Since we're all remote because of, I can't say why it's remote, because then we get censored on some platforms, but we know that there's a health crisis. So I guess this is what the person referred to. Sorry, I can't say the word. I asked to spend a few extra weeks in Singapore with my family. They rejected my request, said it was a tax issue, and they didn't want to explain anymore. I don't believe that they are correct. What is your guidance here? Okay, so first of all, I don't want to get into any issues you may have with your superiors, right? That, you know, that's a corporate personnel, whatever issue. From a tax perspective, I think there may be a point, and if you remember one of the first slides that Boon Yip had in his deck, he was talking about permanent establishment. I mean, I don't know anything about you. I don't know the name of your company. You didn't mention it. So I don't know where you sit in the company, but from a tax perspective, if it is that your position is of a more senior nature, and for example, if you have the ability to, let's say, conclude contracts, you being in Singapore while your company is in the US and you're an employee, it may trigger what Boon Yip had in one of his earlier slides, something called permanent establishment. And as a result of that permanent establishment, your company in the US, your employer in the US may become taxable in Singapore. So again, I don't know the nuances of the situation with your company, but just generally speaking, this could be what your boss is referring to. By you spending extra time to be with your family in Singapore, and I know, you know, it's a special time of the year and everything, but perhaps that's their concern. And so if so, perhaps this is an opportunity to take this point to your boss, or perhaps someone in your finance or your tax team, and have a deeper dive into that and have a more of an exploratory conversation with them and see what sort of arrangements can be made. But I get it, you know, there's so many people working remotely because of that the health crisis that we're all facing right now. But unfortunately, there are tax implications to someone who may be of a senior level, spending a lot of time in another jurisdiction. So, or even within the US, just spending time in another state, there may be tax consequences, so far less internationally. So I'm sorry that, you know, it's a difficult time, but hopefully you and your boss can work it out. Sorry. Okay, next question. Okay, someone is a US citizen, they're based in Hong Kong, and she wants to move to Singapore to work for a technology company. And she has the opportunity to work as an independent contractor for this Singapore-based technology company. And she wants to know whether she can form an LLC in the US, for example, Delaware, and use that as the vehicle to invoice I guess it would be a client, because it's not an employer-employee relationship, but an independent contractor service provider relationship. Okay. This is an interesting topic or question or idea, because I've heard it more than once in the past few months. And you know, someone got quite upset with me when I gave them the answer. So I hope you don't get upset with me too. So again, this ties back to what Boon Yip mentioned. You know, that first slide that Boon Yip put up, that's perhaps, you know, one of the most important slides when it comes to doing business across borders, this idea of permanent establishment. So you may think that you're in Singapore, you moved to Singapore from Hong Kong, and you work through, let's say, a Delaware or Nevada or Wyoming company that you set up. But you set up that company, right? So you're like the only person with this company, and you're using this to invoice for work being done in Singapore. The point is that that company that you have set up in the US has what we call permanent establishment in Singapore. So as a result, that company by right should be taxable to Singapore, and the Inland Revenue Authority of Singapore is, you know, has the right to tax that company, because it has what we call a substance. You have the key decision makers, or what we call management and control. So that's the two tests in Singapore's tax legislation. It's all about management and control. And when management and control is being exercised from Singapore, that's a Singapore company regardless of where it's incorporated. So in your situation, again, we can't give advice, because I don't know the nuances of your situation inside out, but generally speaking, we would have a conversation with a client in a similar situation to yours, and we'd advise forming a Singapore company. And,
Yeah.
you know, go ahead.
Sorry. Sorry,
You
just
jump in, yeah.
to add a little bit more. So looking at your context, if you were to provide your service in Singapore and the invoice goes to the US company, you could possibly be subject to withholding tax also, right? So there are other aspects to look at, like what Darren was saying, that you have to look really at the context. It's not something that is exact, but that could be a possibility. Yeah.
Yeah. So there you go. It's even more complicated. So I think if you want, you can contact us directly. Boon Yip put our contact details at the end on his last slide, but you can reach out to us and we can work with you more closely to come to a solution that makes sense. But definitely setting up this one-person company in the US while you are working in Singapore for a client in Singapore, we don't think that that works. That doesn't really work. Okay, so again, sorry for the bad news, but hey, it is what it is. Next question. Right, how is CPF? So I guess someone is either a US citizen who is a PR in Singapore because they're asking about CPF, or they may be Singaporean who holds a US green card. They didn't say, but I assume it's one of the two. CPF is a common subject area for us because typically when you work with US-based tax professionals, they don't understand what the Central Providence Fund is. They don't understand what the CPF is. They don't know whether it's like a superannuation in Australia. They don't know whether to treat it as a PFIC, a passive foreign investment company for US purposes. They don't know whether to treat it as a trust for US purposes. And it gets really confusing. So being that we are a US tax team that's actually based in Singapore, that gives us a greater closeness to the nuances of working in Singapore. If you go to our website, HTj.tax, there is an article that I wrote about the CPF, and in it, I was actually able to quote an opinion given by the US Embassy in Singapore. Back in the days when the US Embassy had a bit more budget, and there was actually an IRS team, an Internal Revenue Service team based in the US Embassy in Singapore. They were asked to consider the CPF and they gave a written opinion. So we have that on our website. But essentially, no, it's not like the super in Australia. It's not going to be a trust. It's not going to be a PFIC. What it is, but at the same time, you can't get the tax benefits that you would get from a Singapore tax perspective, because from a Singapore tax perspective, you get to reduce potentially your taxable income to the extent that you contribute to the CPF, but you don't get that benefit from the US. So it's not treated like a qualified plan from a US qualified plan, like let's say a 401k. What you need to do is the interest that you get from the CPF, that will go on your Schedule B. And the fact that you have a CPF means that you're probably going to want to check the box at the bottom of your Schedule B. Depending on the threshold of your other financial assets, it may trigger Form 8938, and it will probably trigger Form 114, which is your FBAR, your Foreign Bank Account Report. So, one last thing that a lot of people forget, even teams that are based in Singapore, with the CPF, there's also an employer contribution. So you're an employee, you're contributing, but there's an opportunity for your employer to contribute as well. Your employer contribution is taxable to you on your US tax return. So I hope that helps. Have a look at the website. And if you have any further questions, feel free to reach out, and we're happy to have that conversation with you or your advisor back in the US to help him or her understand how the CPF should be treated. So that's that. Moving on. Again, for those who just joined, feel free to type in the box below any questions or issues that you want us to explore, have a conversation about. Next one. Okay, someone is leaving Singapore. Sorry to hear that. Leaving Singapore to move to the UK. Right. So in a situation like that, when you're leaving Singapore, particularly to go to a higher tax jurisdiction like Europe, you need to be prepared, right? Because you've been spoiled in Singapore, being in a relatively low tax environment. So you're going to be jumping into a fire from a tax perspective. So you go the UK, just like the rest of Europe. I know the UK is not part of Europe, but you know what I mean. It is a high tax jurisdiction, so some sort of planning is recommended. So you probably want to sit with an advisory team who understands both Singapore and the UK, if it is that you're moving, and the US, because you're US exposed as well. There are tax planning opportunities from a UK perspective. You can elect something called a split year treatment, where part of, even, I don't know when. No, you didn't mention when this year you're going to be moving to the UK, but you do have an opportunity to exclude some of, depending on when you move to the UK, the period, the part of the tax year before you move, you can exercise the option to exclude that from UK taxes, rather than go with the default where the entire tax year is taxable to the UK. So electing that split year treatment provides a planning opportunity to the extent that any big transactions you may need to make, you can make in Singapore, especially capital gains, stock options, whatever, you can make in Singapore before moving to the before moving to the UK, I'm sorry. In addition to which, you can elect to be what we call, or what is commonly known as res non-dom. So you can be tax resident in the UK, but without being tax domiciled in the UK. And that gives you the opportunity to exclude your foreign income, your foreign source income from UK taxes. Everything is going to be taxable to the US, obviously, but the UK tends to be a higher tax jurisdiction than the US. So when you UK-US exposed, you tend to plan to the UK rather than in Singapore when you plan to the US, because it's a higher tax jurisdiction. So bottom line is, I would recommend some sort of tax optimization strategy session with a team, and we're happy to provide that if you're not already committed in another direction. We go through all your assets and all your income streams and help you, help guide you as to what's the most appropriate decision to you given this big step you're about to make. Hope that helps. Moving on to the lesson again, for those who've just joined, you can just type your questions in the box below and we will get to them in the order in which they are received. Yes, what's going on with the IRS? Yeah, complaints. It's not just, no, it's not you. So someone is, having problems with the IRS and delays in correspondence and processing. It's not you. It's because of the larger health crisis, the name of which we can't mention because then we get, sanctioned on certain platforms. But because of the health crisis, there's a backlog in terms of processing. There's some returns for 2020, which were submitted in 2021, which have yet to be processed by the IRS. So we know we have clients that have paper filed last year in a timely fashion, and their returns have yet to be processed because of this backlog. You can just do a quick search, or you can look at irs.gov for the latest press release, but there are millions of unprocessed returns because of the crisis that is going on. So what does that mean? It means we recommend and we work with our clients in the following way. Where possible, we try to e-file, because at least when it's e-filed, it's the system, the technology is going to process that return. When you paper file a return, then someone needs to scan that in. And what some of the agents have been doing because of the health crisis, when a package or mail is received, they don't touch it for a couple of weeks because they want to give it time. And then they open it. And then of course, there's social distancing in the office. So they're not at capacity. And it just gets more complicated. And for those who are trying to ring, you're right, it's been even harder than usual. I think it's less than 10% of the calls to the IRS have actually been answered. So it's not just you. So you try to e-file as much as possible. And I don't know whether you're self-filing or not, you didn't mention, but when you self-file and you handwrite on the return, that increases the processing time as well. And that also opens it up to mathematical errors. So try as much as possible to use software if it is that you're a self-filer. One of the big changes last year were the child tax credits. Please look out for that form, that child tax credit form. That is super important because that information, the IRS is going to send you something in the mail, and that form is necessary for your return. So please treat it very carefully. And that leads to another issue that people are having on the other side, which is delays in mail arriving into Singapore from the US. And again, it's not used, the IRS, there's a lot of delays. We have clients receiving letters from the IRS this week that were sent in November. So it's quite a delay, and some a little bit before. So please keep that in mind. There are also a lot of returns being flagged for identity checks because of identity theft. So even to be honest, my return was flagged for, just a random identity check. So, it happens to everybody. They just want to make sure that no one is being a victim of identity theft. So just, again, use the software, try to e-file. If it is that you expect a refund, provide your bank details. Don't check the box for a paper check, because that's going to take a long time to be processed and then to enter Singapore. So hope that helps. It's not just you, but there are ways that you can work with them. Okay. Yeah, so someone is at, okay, sorry. So there's a question below. Okay, let me jump to this one. Thank you, Armando. I'm an American citizen with permanent residence in Singapore. If I receive dividends, distributions from a Singapore company, where I am a director and owner, would I need to pay tax on that dividend in Singapore? Well, Boon Yip, for those who can't see because they're not on Zoom, Boon Yip, do you want to give your response, because Boon Yip typed an answer? You're on mute.
So just to answer a question from Armando, so the dividend you receive from a Singapore company is not taxable in Singapore. But if you are American citizen, I believe Darren can advise, is probably taxable in the States. Yeah.
Yeah, Boon Yip, you're absolutely correct. Every worldwide income is taxable to the US, including the dividends that you receive tax-free in Singapore. Which leads to another dilemma that company owners like yourself, we have quite a few of our clients, company owners, US exposed company owners. And what they have is a bit of a dilemma. If you remember one of Boon Yip's slides in his deck, and for those who missed it, this is being recorded, so you can go to YouTube or wherever, YouTube, I guess, or to our website, HTj.tax, and you can actually look at the recording again. So if you missed Boon Yip's deck, because he mentioned that dividends are tax-free to business owners here in Singapore. So therefore, you are, from a Singapore tax perspective, you're being incentivized to take as much as you can in dividends, but then you're US exposed. So Section 911 of the US tax code, which is perhaps one of the most generous provisions for those who are US exposed and working internationally, where you get a chunk of your income, your salary, free of US tax. And that amount moves with inflation. So I think it's going to be like 112,000 for when you're filing your return for last year. So the first 112,000 plus your deductions and whatever, plus your housing deduction and some of your utilities. So let's say your $150,000 of income, of earned income, will be free of US tax. So therefore, from a US tax perspective, you incentivize to take more as salary and less as dividends, right? You get me? Whereas from a Singapore tax perspective, you're being incentivized to take more as dividends and less as salary. So that's where we work with clients to find that Goldilocks level between how much should you really be taking thinking of the Singapore perspective as salary, and then how much you should be taking as dividends to get the balance right. And unfortunately, there is no double tax treaty between Singapore and the US like there is with Indonesia to the US or Philippines to the US, Australia to the US. So those dividends that you're going to get from your Singapore company are going to be taxed at ordinary tax rates. So it could go up to 35% or whatever tax bracket you're in. And then on top of that, sorry, but we deal with this every day. On top of that, because Singapore is in a low tax jurisdiction, a so-called low tax jurisdiction like Hong Kong, you're going to be subject to the profits that you have in the company. There's a deemed distribution because typically or historically, you would only be taxed from a US perspective, right? On the money that you pull out of that Singapore company in the form of salary or some sort of bonus or consulting fees or whatever, plus dividends. But now there's a tax on the retained earnings. So it's called GILTI, Global Intangible Low Tax Income Tax. And yeah, this is one of the provisions under President Trump Tax Cut and Jobs Act back in December 2017. So as a result of that tax, any retained earnings that you have on that company balance sheet, that even though it's not distributed to you, will be taxable to you as the majority owner of that company. So again, some sort of planning would be helpful in terms of getting the tax optimization right. So yes. Next question. Oh, okay. Someone else, Lancaster. He falls into the same scenario as Armando. I hold dual nationality, US and UK. Yes, Boon Yip and our advice would be the same. So you'd need to do some planning because you'd be having to balance, just like Armando, between how much you're going to take as salary versus how much you're going to take as dividends, bearing in mind that lurking in the back is that deemed distribution, basically a tax on phantom earnings called GILTI, Global Intangible Low Tax Income Tax. So yeah, sorry. Okay, looking at other questions. I'm just going to go quickly over to some of the other platforms to see if people are asking questions over there. Okay, someone is asking about flag theory. This is unusual. I normally get this in other live streams, not in the US Singapore one. So I'm aware that flag theory is the name of a legal entity in Singapore and in Malaysia, but it's also the name of an actual theory. It was coined by a guy called Harry Schultz back in, I think it's the 50s or 60s. He was politically minded libertarian, and he advocated what he called three flag theories, which was over time, I think by the 80s, refined into five flags. So the five flags would be, well, where you are a citizen, for him, it will be the United States, would not be where he's resident. He's resident outside of the US, and he will bank in another jurisdiction. His company will be in another jurisdiction, and he would entertain himself in another jurisdiction. Five flags. Some people who are into crypto, they advocate 6 or 7 flags, but essentially, I don't think it's meant to be dogmatic or prescriptive. It's the idea of having an internationally diversified lifestyle. And some of our clients come from certain minority religious groups or ethnic groups that historically may have had a hard time in their country of origin or where their grandparents or their parents came from. So again, there's this idea that you don't have all your eggs in one basket, because if things go funny in the jurisdiction in which you have most of your wealth, you're completely exposed, right? So it's essentially the idea of having a diversified lifestyle. Now that has come to take a different shape now that we're in this new normal, this post-health crisis reality. And with the lockdowns and reopenings and whatever, Many people have found it, those who have the ability to work remotely or to manage their businesses from a remote location, they found it quite convenient. So, for example, there are neighborhoods, it was reported in the New York Times, there are neighborhoods in New York when things really kicked off in the middle of 2020. Some neighborhoods, like 40% of the neighbors just moved out in some of the higher income neighborhoods. Why? Because they had a plan B. They moved, upstate or one of the neighboring states as far down as Florida, or to Martha's Vineyard, or one of the, more rural settings where they'll have more space and whatever, when things were getting pretty intense in New York. And, similarly in Singapore, we've seen some of our clients who have that plan B able to, pick up, and we have clients that have moved to Bali to manage their situation in Singapore from Bali. Many have returned to the US. Some have moved to parts of Europe where, they have more space and whatever the unique situation would be. So it may be worth, the original, putting aside what the original prescription behind flag theory may have been, it may be worth considering having a plan B. And for those who need to travel for work, when borders were closed, of course, it has become quite difficult. In some instances, however, it is helpful if you are a resident of that jurisdiction. In some cases, it won't help. In some cases, even citizens won't allowed to travel in and out. But in some jurisdictions, it did help. Non-essential travel was blocked, but essential travel, which would include returning to your home, was being allowed. So for those people who had to make business trips, it was helpful that they were a legal resident of that jurisdiction they're trying to get into. So again, stepping back, I'd say it is, in its original form, it may not be relevant today, but the principle or the spirit behind it, the idea of being diversified and having a plan B, I think it is quite important. And especially in this new normal, I think it's worth having, different residencies, just in case you may want to move to somewhere that's more comfortable because of, cases increasing wherever you are. So yeah, hope that helps. Let's see. Are there any more questions? I'm just going to do a quick check of some of the other platforms again to see whether anyone else is asking any questions. Okay. Fantastic. Okay, I think that's it. I think we've answered all your questions. So thank you for joining us. And again, this is being recorded, and you can have a look at HTj.tax, and you can see all the podcast platforms and websites where this will be uploaded from. I think it's going to be in Spotify, iTunes, SoundCloud, Google Play, Amazon. Basically, wherever you're going to get your podcasts, you're going to find this recording. We do this every week to find out what we're going to talk about next week. Just have a look at HTj.tax and click on events. You're free to join us anytime. If you have any further questions, please feel free to reach out to either Boon Yip or myself. We'll be happy to work with you on any Singapore, US, or any international tax issue in general. So international tax in general, Singapore and US in particular. Thank you for joining us, and we'll see you next time. Bye-bye.
Here are 4 ways we can help you. Number 1. Sign up for free webinars on US expat taxes and international entrepreneur taxes at www.htj.tax. Number 2. Stream premium educational videos at www.htj.tax. Number 3. Contact us for tax optimization consult over Zoom. Number 4. High net worth. We can quote for doing your US international taxes returns. Our books and upcoming event are available at HTj.tax. Please subscribe, like, share, and comment below. Email us at help@HTj.tax to engage us, to advise on international tax or business matters.